Whose chair is that? We invite you to the podcast one time. I'm just teasing. Do you know what Kenzie said before you joined? She goes, Davey's going to quit on us. She's like, we have put Davey through the ringer this tax season. It's a miracle that you're even here.
Not gonna lie, it crossed my mind this week.
No, Davey, no. Welcome to the podcast, everybody. We're feeling a little unhinged today because we have made it through tax season, but we're only 9 days post tax season. And so we haven't fully recovered as human beings. And I do say we, and Davey's over there going, what do you mean we? Because she is tax season. So you're going to have to give us a little grace today. But we did cross the deadline. Are we done filing taxes? Unfortunately, the answer is a hard no, but the pressure's off just a little bit, right, Davey? She still thinks about quitting every day, every moment of every day. But she's here, and we roped her into this podcast just because we wanted to put more on her plate. And we're so happy she's here. And if you are an accountant or bookkeeper or have anything to do with tax season, congrats to all of you for surviving. And of course, I do mean Allison Ferguson, our one and only listener. Allison, congrats on making it through tax season. Today, because we are so tired of talking about taxes, we're going into bookkeeping today. And if you're like, yes, switching it up, not fully, we are still talking about accounting, but today we're talking about bookkeeping, which may not sound very exciting, but we have a little bit of a horror story to tell you. And I'm kind of excited. We've been bottling this up. Okay, everybody, Kenzie especially, we have had some feelings lately about bookkeeping. And this particular story was a little bit emotionally jarring for us. Blame it on tax season, whatever. I don't know. Maybe we were feeling hormonal, or I don't know. It could be a variety of things. I'm choosing to believe it's because we care so much about our clients that it actually resulted in a physical response. But, we want to tell you the story today. And the goal of today's podcast is, by telling you the story, it will help you as a small business owner know what to look for when determining who you should hire for bookkeeping, and how to know if they're any good at their job, and how to know if your financials are actually accurate, which obviously we talk a lot about the importance of having accurate financials. So how do you know if they're accurate? That's the question we're trying to answer today. So let me set the stage for a little bit. We have a client who works with us for CFO services only. And that's actually not something we do anymore, because this is not the first time we've come across this situation. So now we only do CFO work if we are also doing the bookkeeping. But this person was kind of grandfathered in, and we're doing their CFO work, but we were not doing their bookkeeping. And they are killing it. Okay. I have never met a partnership duo that is absolutely unstoppable like these two. And if the two of you are listening, you know who you freaking are. I am obsessed with your business. I'm so proud of what you've been able to accomplish this year. And they're relatively new. They started their business right at the end of 2023, I believe. 2024 is the first. No. I'm all screwed up with my taxes. So we just closed out 2025. It is 2026, which means they started the end of 2024, and 2025 was their first full year in business, I believe. And that's really when we got involved, is right at the beginning of 2025. And they are crushing it, absolutely crushing it. They have healthy revenue. They've got really ambitious goals. They're so organized. They know what they want out of this business. It is like my love language. And they have had this bookkeeper who we've had good experiences when working with this bookkeeping company before. I absolutely no shade to this bookkeeping company, because I've worked with them before. I know they do a good job, and I actually really like the people that work there. But what happened was they had one of their bookkeepers leave and another one step in, and immediately things stopped adding up, literally stopped adding up. We'll get into kind of what we found and how we found it so that you can copy that pattern. But it was critical because all of a sudden the numbers were not off by dollars and cents. Although to me, that's a problem, but that's just me, blame it on my accountant brain. But we're talking tens of thousands of dollars. The books are off, and the problems started compounding very quickly. And, at first, and we'll kind of get into the story, but at first we were kind of wait, something's something's off here. Like, it seems like there's a little problem. And I kind of emailed both the client and the bookkeeper and was like, something's not looking right. And within what? 2, 3 days, maybe, Kenzie, we were like, this is like red alert. We've got big problems. Everybody shut the operation down, like hold everything. Like literally within 72 hours, it went from like, wait, I think that maybe there was a miscommunication to like, no, this is not going to work. Like, this is a big problem. And this is really Kenzie's moment to shine, because one of my favorite things about Kenzie is she's cool, calm, and collected. She is organization queen. But when something goes amiss, she's going to freaking fight somebody. Like, she is not going to let it go until it is fixed. And I just have to brag for 2 seconds about the fact that when we got on the call with this client to kind of discuss next steps and what we wanted to do, they were like, we have never really seen TPP like get passionate about something. They were like, the last 72 hours, all of a sudden we're like, well, these people care about their jobs. And that was 100% because Kenzie entered the chat literally and was like, here's everything that's going on. Here's why it's not going to work out for you. Here's what we need to do next. And they were like, we hardly ever hear from Kenzie, but when we do, we know it's like a big deal. And I think that alone, like, I just want to give you credit for like, that is a huge part of our brand, is that we care a lot. But sometimes I think it's hard for us to show like how much we care about accounting without scaring people away. But you did such a good job of like, we care so much about you as a client. You don't have to bring your bookkeeping to us. We don't care. That doesn't matter. But you better have good bookkeeping, or you are literally throwing money down the drain on CFO services and bookkeeping services. And our job is to make sure you're never throwing money down the drain, no matter what the service is. And so I think that they liked us before. I think they might have fallen in love with us after you got involved, Kenzie. So
I went a little unhinged last week. I don't know what came over me, but I think it really comes down to Joey and I and our team are very passionate about our clients and how well they do. And we've said this time and time again that if you're making decisions off of bad numbers, you're making bad business decisions. And so I just can't, I don't know, my love for the clients, like I can't have them making decisions on bad numbers. It just can't be. And so I think that's
yes.
kind of what just, I don't know, it just started this whole unhinged Mackenzie last week of like, this is not a great look. And we'll dive into it a little bit, but I'm like, had we taken this situation at face value and been like, oh yeah, everything looks great, like it could have really hurt the business in a way. And, it just could have been really bad. And so I
Yeah.
think this came down to, I was just very passionate and I was like, we can't be making decisions if our numbers aren't right. So,
Well, and it's so great because coming from me, and my role is very much like sales, marketing, and a little bit of CFO, right? And so coming from me, it might feel a little disingenuous sometimes if I'm like, hey, your bookkeeping's bad. It might sound like a sales pitch, and I can understand that, right? But when Kenzie says we are morally opposed to you having bad data, like then they know, oh, this is getting real. Like we actually have to pay attention. And I just appreciated that so much because even though Kenzie's role is mostly ops, she has spent a lot of time and energy learning about finance and learning about accounting so that she can catch these problems. And I love that we've got multiple eyes on all of our clients. So, we can hit it from every department. And so it was just really fun to like be able to work together on that and show the client like, yeah, we care more than the average human, maybe too much. Maybe we care too much, but I think it's great. I think it's what makes us good. So I'm not stopping it. I'm in it. What's up, sister? I am in a podcast. Can I talk to you in a minute? Ruby's going to be here in 10 minutes. I know. She's on her way. Why don't you go wait outside for her? Oh, 5 minutes. 5 minutes. Okay, close my door, please. Thank you. Okay. It's okay. Thanks, Molly. I think she's interrupted like the last 3 podcasts. Just don't know. All right. So we talked about why we care a lot about this. And again, I think maybe the average human might be like, that's because you're accounting nerds and, that's on you. But here's why I need business owners to care about this. Okay. Most business owners probably think of bad bookkeeping as something that's like inconvenient or like if the spreadsheet's messy or the reports are late, like that's annoying, but that's about as bad as it gets, right? They're like, oh, that's kind of frustrating or it really doesn't bother them that much. But the real cost like Kenzie mentioned, is that if you're making decisions on data, and this is one of many, I'm going to have Davey talk about this too. Sorry, Davey. Bryce, hope you read the script. When you're making when you're making decisions on bad data, you are overspending, you're undersaving, you're missing a ton of tax strategy, a ton, and you are missing, really you're missing growth opportunities, right? Because think about it this way. If I told you that your revenue is $50,000 this month, and your revenue is actually $30,000, you don't have the same reaction to that. If your goal was to make $50,000 and I said, hey, you hit your goal, congratulations. You're going, sweet, I'm amazing. Let's go to lunch at Chili's and celebrate as a team. I don't know. That's what I do when I hit my numbers. You do you. But when I tell you, hey, $30,000, your goal was 50, but you only made 30, you're going, okay, I need to cut expenses. I need to ramp up my sales game. And really there's like a psychological change in what happens when you are trying to increase sales. Every time a new client comes in, you're going to treat them differently, whether you're below goal, at goal, or above goal, right? If you're above goal, you might be a little more casual about the sales call. When you're below goal, you are probably a little bit more aggressive. So it's important. And that's just one teeny tiny example of how you're going to react to your numbers, right? And this particular client revenue was overstated pretty significantly. And the other thing that's important is we also do controller work for this client. So every month at the end of the month after the books are closed, I take 20% of net income and automatically put that over into tax savings. That's a personal choice based on the client. I did kind of influence that decision because I think it's really smart, but that's maybe not necessarily the right move for everybody, but for them, they can do it. It's important. Well, imagine if revenue comes in at 90 grand and they actually only made 50 grand. And so their net income was like $2,000, but their books say it was $2,000 plus the additional $40,000, so $42,000. Now I put 20% of $42,000 in their tax savings account. They don't have that cash to spend. They don't have that cash to move over to tax savings. And now they're strapped for cash and looking at me like, what the heck is going on, right? Again, just two small examples of why it absolutely matters that your numbers are solid and that they're being presented to you accurately on time. Because if you're getting numbers for April in July, what are you going to do with that? Now you've had 3 months worth of sales calls that you didn't react appropriately to, right? So anyways, there's a lot. I could go on forever probably about the real cost of bad bookkeeping. I will spare you all. Althea, let's kick it over to you because this is a topic that you're also very passionate about because you are our lead bookkeeper and you have seen this time and time again. Outside of the problems that I just touched on, what do you see when business owners have bad bookkeeping, what tends to happen?
Oh my gosh, so much can happen. But I think it's kind of bringing it back to what Kenzie was saying when she was talking about bad decisions. You're making bad decisions because you're looking at bad data. It just really is a compounding problem. Every month of bad data is another month of bad decisions. And we get a cleanup, like kind of what Joey's talking about, and we have to go through it, and we obviously have to be paid for it. And it can take months sometimes to do that cleanup, depending on how long there's been messes made. But let's say all of 2025, you didn't have bookkeeping or you had very, very bad, messy bookkeeping. Okay, we get it cleaned up in April 2026. You just missed a whole year. You just had a whole year of maybe bad decisions because you didn't have the correct numbers. And then you get to tax season, and tax season's over. You've missed tax strategy. You've missed there could be some serious, important decisions you made on those numbers, and none of it was real.
Yeah. And you react differently. I mean, I will never forget, and I've admitted this on the podcast before, I'm going to admit it again. I don't know that Davey's heard this and she's going to fall out her chair, but I remember I was applying for like some award, like business award, like fastest growing, whatever, right? This was last June. Is that right? Yeah. And I had to submit our year-over-year P&L in order to prove that we were growing, right? And that was the first time I looked at our year-over-year P&L, period. Davey's face says it all. Please, if you're listening to this on Spotify, go look on YouTube. Minute 17, whatever we're on. That was classic reaction. I had never looked at our year-over-year P&L, and I changed as a human being at that moment. And the reason why was, hi, we're in a podcast. Huh? We're in a podcast. Are you leaving, Mark? Marcus asked and answered, I suppose. But I changed. like genuinely changed as a person because all of a sudden I saw how much growth we had year over year. And I was like, why am I stressing? We are on the right track. I am like, we are growing. We are performing way better than like what my vibes are telling me. That from Gracie. Gracie talks about vibe accounting all the time. I'm like, I think blame it on whatever you want, but like you're saying, Althea, if you're not looking at the numbers, you are acting based on emotion. And I think there is 110% a place for emotion in business, not in your finances though. And if you feel like a failure all the time, you are going to burn out and you're going to, lose the will to continue running your business and you're going to continue feeling like a failure. The confidence that I gained looking at my year over year P&L and being like, slowly, one tiny baby step every day, we are getting better and we're on the right trajectory is where it should be, took so much unnecessary pressure off my shoulders and I showed up differently as a business owner. And so, if I had seen that data, and the same goes for month over month accounting too, if I had received a P&L, this is so embarrassing to admit, truly, but if I had received a P&L and looked at my P&L every month, like I advise every business owner to do all along, I probably would have performed better and we'd be even further because I would have gotten out of my own way because I would have had the confidence to just keep going, right? So that's kind of the emotional side. Okay, Davey, putting you on the spot now. Bad bookkeeping is like keeps you up at night from a tax side of things. What does it do for business owners from a tax perspective when, let's say, income is overstated? Just to name one.
Their reaction of, why do I owe so much?
Yeah.
I shouldn't be having to pay taxes that high. I thought I was going to take a loss.
Mm-hmm.
I don't show that money, but here's your books. Here's what your books say. I'm only as good as your books are.
Yes.
If I dive into them, that's more time.
Yes.
You're waiting and making on time payments, let's plan for the current year, because let's be honest, most of them are extended. So can't make an accurate new current year estimated tax payment based on bad data. I hate giving out the bad information based on how the books look. And it's a lot to unravel. They're disappointed, they're angry that they owe because this is what the books say.
Well, and they don't have the cash to pay for it because they didn't actually make that income, right? You're like, where am I going to find $8,000? I don't have in it, But I think this is a common misconception. So, Davey, kind of talk me through as a tax preparer, and you also do bookkeeping, but let's pretend in this situation you didn't do their bookkeeping and they came with a P&L. So again, in this scenario, we didn't notice any bad bookkeeping happening. They just delivered the books to you, put them on your desk, and said, prepare my taxes. You, as a tax preparer, have no context or no reason to jump in and be like, something doesn't look right. And so you're not finding that red flag until after you've prepared the tax return. You've done everything that you have been hired to do. And then they go, this doesn't feel right, which, by the way, 90% of the time, that's just because you're going off of vibe accounting and you don't actually know. So when you say it doesn't feel right, Davey's probably like, I'm so sorry to tell you that I can't do anything about your feelings. She's much nicer than that. That's why she does the taxes and not me. So that's kind of a like, well, okay, maybe that means something's wrong, but probably not. But there is the 10% of the time where their books are wrong. But again, at no point during your process have you had any reason to question the books, and you really have not been hired to question the books until the very last piece of the process when the business owner goes, wait, something doesn't feel right. And so then, like you said, then it causes waiting. Then we have to extend. Then we have to, dive back in and do things that are fully out of our scope. But because Davey's a nice human being, she usually does it. And if you wonder why accountants are burned out on 415, there you go. There you have it. Like, kind of give me a little bit more context of that process. Because I think sometimes business owners are like, well, you're a CPA. If my P&L is wrong when it crosses your desk, you should just know that.
No, it
So
is
why not?
The hardest things I do is just take their P&L, their balance sheet, and enter the data, make sure I'm balancing. Yeah, billing everything, getting to that point and say, here you go. It's an awful feeling talking about a vibe when they look at you and say, this doesn't feel right. Oh crap, what did I do wrong?
Yeah.
I
Yeah.
plugged in all the data that was given to me. It's some of it, like, there's certain things that as a tax preparer we look at and say, well, this should not be a negative number. So I'm going
Yes.
to question that.
Right.
For the most part, being a bookkeeper doing taxes, I want to be able to dive in because that number doesn't make sense. Or the previous year tax return does not match the current data, which is if I'm strictly just looking at tax preparing, I'm putting in the previous year ending balance as my beginning balance, and they don't
Yep.
match. So
Yep.
I'm trying to make everything line up and then present it to them, and they say, "This doesn't feel right. I'm going to need a deeper dive into your books."
Right.
And that's
Right.
terrible because I
Right.
knew I'm going to find something at that point.
And then I will also say, as passionate as we get about this subject of having good bookkeeping, never do we want to be the people to point fingers at other bookkeepers and be like, you're not good. Because we make mistakes all the time too. I mean, it's not like I'm the world's most perfect bookkeeper. I'm pretty damn good, but I'm not the best. Okay. I can admit that. And so I never want to throw another bookkeeper or another tax preparer or another accountant under the bus because 9 times out of 10, I don't have the information and it's the client's fault. They don't, a lack of understanding, not, I shouldn't say it's their fault, but they don't have the understanding. But like, I would hate for someone to do that to me. But at the same time, like, we do have to, because we know all of the problems that come from bad bookkeeping. I often, and Davey will laugh at me for this too, but I often talk about how it's really important that your bookkeeper have a bit of tax knowledge, preferably a lot of tax knowledge. But if it's 0 or less than 0, you're probably in hot water because they don't quite understand the full picture. And that makes Davey's job next to impossible. And that's one of the things that I love about our firm and particularly where our firm is going. I love that we have an expert in every area to help kind of guide the bookkeeping, or payroll can guide different strategies. Like, we all kind of come together and make it as optimized from every angle of finance as we possibly can. Because often CFO strategy varies a lot from tax strategy, and we want to make the perfect blend of the two. And that requires the bookkeeping to be changed up. And so I love that we've got a team of people that can really, come at it from all angles. And Davey does a really great job helping our bookkeepers do that. So, okay, hopefully we've convinced you that having bad bookkeeping is a problem. Let's kind of get into what we actually saw. Like, let's just tell the story. Kenzie, why don't you kind of dive in and talk about where this started, how it started, and what we found.
Yeah. So like we said, we were doing CFO work for this client, and in order for us to do our CFO work, we have to have the books closed and presented to us so that we can do our analysis and then we can talk to our client. And it was like probably the 15th of the month or so, and we hadn't seen anything yet. And so we just asked the client, like, hey, we're just checking in, seeing where your books were at. We wanted to get an update so that we can make sure that our meeting with you is the most effective that it can be. And their books hadn't been cleaned up yet. We figured out what the issue was. They got it solved or whatever. And they presented their books to them probably within a day. And when they got their reports for the month, their income was significantly inflated. And to be fair, this bookkeeper probably wouldn't have known that because they are not in charge of their AR. But when the client looked at their income, they went, that's way too high. And I looked at it, and we had known that their income was likely going to drop in March because they had lost a couple clients. And so we were kind of anticipating a drop in their income. So when it came through at 20,000 more than what we were expecting, they went, something's not right here. And then in addition to that, none of their payroll had been posted for the month. And so it really, the client again looked at her books and went, these are not right. And this client luckily had a pretty good understanding of what their income would be, what their expenses are, because they don't typically have a ton of crazy expenses every month. They have a pretty standard reoccurring charges every month. And so she was like, payroll's not posted, so our net income's not right. Like, what is going on? And so I kind of jumped in there and kind of started digging around. So that was kind of our first red flag of like, okay, our income was inflated. Like, why didn't someone catch that? Okay, whatever. But then the bigger thing was like, okay, payroll wasn't posted at all. And that should have been a red flag immediately when they downloaded the P&L to send it to the client. Immediately, they should have seen, oh, we're missing a bunch of payroll. And so that to me tells me that they didn't review any of their reports before they sent them to the client. And then also we had noticed that like no transactions had been posted for the month. And it was the 15th of the month. And so again, it was like just a couple things that were like, gosh, this just isn't sitting right with us. And so those were just kind of a thing. So our income was inflated, accounts receivable, because our income was inflated, our accounts receivable on the balance sheet was also not accurate and not correct. And
And
then
talk about like for our clients that invoice out of QuickBooks, if AR is incorrect, what that actually means for their client relationships.
yes, so that's another.
Davey
It
laughs.
could go really bad really fast. When your accounts receivable, some of our clients don't invoice out of QuickBooks. Some of them do. Some of them have a combination of the two. So kind of, when you invoice out of QuickBooks, if they pay it and deposit it, like you have to match that income to the invoice. And if you are not matching that on a timely basis, these clients are getting reminders about their invoices. And then they're going, I paid. Why hasn't this been like marked as paid? I showed it paid. Like it just creates this chaos. And then of course the client is coming to us and saying, because we also do their accounts receivable, actually, we invoice their clients for them and stuff. And so they're coming to us going, hey, they're saying that they're paid. Why hasn't this been noted or whatever? And we would look and it was because the income wasn't matched to the invoice and we just needed to match that. So they stopped getting reminders. But in this scenario too, there had been a credit that was not a real actual credit that was applied to this client's account. And luckily, because of our processes and things, we actually send a PDF copy to this client or to our client's client.
Right.
Send a PDF invoice to them. So luckily we had record of what we had and we were able to look back and kind of see what happened. But some bookkeeping was done and some credits were created and they were applied to this client's books. And so there was like I think it was like $5,000 to $10,000 credit. I can't remember the exact numbers, but that was applied to the client's account on their invoices that was not real. And so it looked like, hey, they got a $10,000 credit. Their bill was $15,000. They got a $10,000 credit. They should only owe us $5,000.
Yep.
And luckily, because we didn't send stuff through QuickBooks to them, they didn't ever actually see that credit and they didn't ever actually get an invoice for $10,000 less than what they actually owed. But if that had happened, that client, it would have looked really, really bad for our client to them.
Not only that, like let's just kind of recap in non-accountanese, not that you're speaking accountanese, but like the recap here is not only was income overstated, so income looked higher than it should have been, but then if the client was receiving reminders and invoices out of QuickBooks, they would have paid $10,000 less than they actually owed. And so your cash now is basically hitting two places. You're going to have to pay taxes on income that's not real, so your cash is depleted from that, and you got $10,000 less from the client that thinks that they are caught up. And I don't know if you've ever had to have the conversation with a client where you have to be like, ooh, so sorry, you actually owe us $10,000 from last year. It doesn't go well. It doesn't ever go well. Never.
It doesn't go well if it's a month, usually.
Never.
After
It does that. It's just a bad look, everybody.
Because we do their AR, like we probably would have facilitated that question, but then we would have had to go to the client's client and say, hey, so sorry, we made this mistake and applied a credit and you actually do owe this.
And that's if you find it. If you don't find it, now you're depleted $10,000 plus whatever you paid in tax on the wrong amount of income. And so I don't know about you guys, but $10,000 in cash for our business is not nothing. That is a huge deal. And if you have to pay between that and then paying taxes on fake income, that could ruin a business, a small business overnight, just from bad bookkeeping. And I don't mean to catastrophize. Is that a word? Catastrophize. Davey?
I say yes.
Davey says yes. Mackenzie says yes. Althea, final
Let's
vote.
go with it. Let's go.
We're not catastrophizing. That does not feel like a real word. Anyways, I don't mean to make a big deal about this.
Okay, we're not English teachers here.
Listen, I work with numbers, not letters. I'm not trying to be dramatic. My point is that I've actually seen this happen. I've actually seen businesses crumble and lose cash because of bad bookkeeping. It's not nothing. And it's not just us nerding out about accounting. These are your dollars in your bank.
Well, and like with this particular situation, because that credit had been applied to the client's account, when they paid their real actual amount of the invoice, because we sent them a PDF copy and they didn't ever get the credited invoice, when that income came in, there was nothing to match it to. Nothing to match it to. We couldn't match it to an invoice. So what happened was it just got posted to sales. And so then our income was inflated by double because it accounted for the invoice and it accounted for the deposit that they hadn't spent. And so that would be a red flag. And we teach our bookkeepers and we are trying to educate them that this particular client, and to be clear, I'm sure that there's been a time where I have done stuff like this. I was a bookkeeper once that didn't know a lot.
Yep.
Come a long ways. And
Yes.
we have a very high standard for our bookkeepers now. But
Davey's like, I fear what it used to look like if this is how far you've come.
we don't talk about that, okay? Just learn and grow from it, okay?
We're getting better every day, and that is what matters. Okay, Davey?
Our bookkeepers work really hard and they know our clients' accounts really well. We really push them to dive in to understand and not just have this surface level knowledge, right?
Yes. Yep.
And so, like, for this particular account, we know that every deposit that comes in, 99% of the deposits that come in for this account should be matched to an invoice. 99% of the time. If it doesn't match to an invoice and is not giving us a match in QuickBooks, that would be a red flag for our team. Our team would go, okay, well, why? Why isn't there a match for this? Let me go check their account. Or let me go ask Becca because she's our AR specialist. Like, she can help me out. You know, we would go check the account. We would see that there's a credit on the account. Okay, well, where did this credit come from? Is that real? If they had a credit on the account, why did they pay the full amount? Like, and then it kind of just, you're asking these questions and you're not just going in and checking a box and saying, oh, I posted transactions. Okay, great. Thanks. Next.
Yep.
We're teaching them to dive in, to be more involved, to ask questions, to look at it. If it looks funny, it probably is, and you probably should dive into it. And we want you to do that, right?
Totally. I love again about the team that we've built, that all that communication. By the way, I'm not suggesting that we are better bookkeepers by any means, but what I love about our company is that all that communication and course correction happens in our team before the client ever sets eyes on it. So we're going to kind of transition into what I'm having a full stroke over here. I cannot speak English today. What good bookkeeping, the charts are burping, guys. We're going to talk about what good bookkeeping actually looks like now and do a little bit of speed round here. But I love that we have, and the client actually came back and was like, hey, we do want to transition bookkeeping over to you guys, but how can you assure us that your team is going to have checks and balances? And I loved that we could say, you have 4 different people that check your books. And that is true of all of our clients that do bookkeeping, tax, and CFO with us. You have 5 if you have a payroll person checking it, because bookkeeping, we have 2 people on it. The person that actually does the bookkeeping and then a reviewer of the bookkeeping. And then our payroll and AR person will go in and double check the payroll and AR pieces of your financial reports before we send them. And then our tax person, and then our CFO, right? Like at all points in the financial pipeline, our team has somebody else checking up on it. And that felt so good to say. And I think that's important, because bookkeeping and tax and CFO, yes, they're all accounting and yes, they're all finance, but we have completely different mindsets about how things should go. And we really do need to collaborate together to make it the perfect blend for your overall financial strategy. And so just having a bookkeeper, if they're great, that's going to get you a long ways, but it's not everything, especially if they don't have tax knowledge. And just having a CPA at the end of the year file your taxes, that's great, but they are not hired to do your bookkeeping. And like Davey said, she uses the data that you give and she puts it in a tax return for you. And then she goes based off of those numbers and will give you, tax strategy based off of the information that she collects. But if she is involved in the books with the bookkeeper every month of the year, you are going to get a much better tax strategy, financial strategy, and you'll get better bookkeeping, which will make better decisions and save you a frick ton of money than if you just kind of cherry pick the different departments. So I love that good bookkeeping, and really my point is good bookkeeping comes with a tax professional and a CFO. And I hate to say it, I don't know who that man is, but that's what has to happen. That is the number one, is like checks and balances from multiple sides of finance, I think is like a solid ticket for good bookkeeping.
Well, and I think lots of times business owners and people just in general think, oh, they're just a bookkeeper. They're just a bookkeeper, so it's no big deal. And like your bookkeeper is like your first line of defense for these
Totally.
businesses. They're seeing the numbers, they're working with them on a daily, weekly basis, and they're the ones that are like in it. They are in the weeds. They're your first line of defense. And then you have your next round of defense. We have the people that are reviewing it, and then your CFO and your tax person. Like, bookkeepers are so important to a business's success, and I think that they go underappreciated sometimes.
Totally.
I'm just here to say, if you have an awesome, amazing bookkeeper, you should tell them thank you sometimes because
Amen and hallelujah.
they're very underappreciated and they're our first line of defense and they're amazing.
Yeah.
Sick.
And I am a big AI person, and this is so not what we're talking about today. I think AI will make this really efficient and take a lot of the grunt work out of bookkeeping, but I have no fears about it replacing my job anytime soon. So that's on that. Okay. Other ways you can determine if your bookkeeping is good. The balance sheet should balance. And I know that I'm like speaking a different language when I say that. If you're not an accountant, I know that that's like alien. And I hate to call out anybody else, but I am shocked at how many firms and professionals do not reconcile the balance sheet on a monthly basis. And I genuinely don't know the reason behind it. There must be some kind of logic because it's more common than not that they don't do that. Davey, do you have thoughts? I would love to hear. You're muted.
You're muted.
I wanted to share a nightmare with you guys
Please.
if I could, really fast.
Yes, if you can. Like, we're not begging.
Yeah, somebody came to me and they said, "What are financial statements?" I said, "You never looked at a P&L. You never looked at your balance sheet." "No, I pay somebody to do that. I have a bookkeeper." "Okay, let's look at what the bookkeeper's done." Never did this bookkeeper reconcile the bank statements. Never did this bookkeeper even offer to say, "Let's go over your reporting." The owner was 100% clueless, paying a bookkeeper to do this each and every month, and never just trusted it was being done, forking out. Like, this went on for 3 years, you guys. 3.
At that point, you are shoveling money into a fireplace. Whatever you're paying for that bookkeeper, and honestly, whatever you're paying for the tax preparer to do your taxes, you're shoveling money in the fireplace because it's all wrong.
And
That's tragic.
they asked me to do the taxes, and we discovered all of this. And the look on this poor owner's face, he was devastated, he was angry, disgusted, but
Yeah.
mostly he said he felt so vulnerable and embarrassed.
Totally. You just feel like an idiot when you're like, I should have known this. But how would you know? When you've hired a bookkeeper, you trust them to do their job. I mean, that just perfectly puts the cherry on top of this episode because it's like, I want you to go and leave this episode knowing how to hold the team accountable. Let's maybe back up because I thought this was a given. But if you're not getting a financial report in your inbox on a monthly basis, we've got big problems. If they're not giving you any information about what that financial report is telling you, you've got big problems. And then that financial report is inaccurate if your balance sheet does not balance. And I am not just talking about reconciling bank statements. I want every line of that balance sheet reconciled every single month because, and hang with me here, but the balance sheet feeds into the profit and loss statement. If the balance sheet is incorrect, your profit and loss statement is incorrect. And I understand why we put so much emphasis on the profit and loss, because it does kind of tell you, it's a really great snapshot of income and expenses, which feels like the biggest part of your business. So I get it, but why we treat the balance sheet like the you guys, seriously, I need a nap. This red-headed stepchild, I will never understand, because it is the basis of everything. It's the foundation of everything. It feeds the P&L. So when you don't reconcile the balance sheet, the P&L is wrong. And again, you have bad data. And it might be $1, it might be $10,000. Like AR, if AR is wrong, your income's wrong. That's how you find out. And this is another checks and balance that we have in our team that I think every accountant across the board should have in their team, is monthly reconciliations of the balance sheet to determine that the P&L is absolutely accurate. You will find overstated income. You will find inaccurate AR. You will find inaccurate depreciation. You'll find out if income or expenses were duplicated. Like when people are like, hey, my income looks kind of funny. Like, can you double check the numbers? I can accurately and confidently be like, no, it's 110% accurate, because I literally cannot double state anything in these books when I reconcile the balance sheet. I can't do it. So that's a big one. Let's talk about the 5-minute audit of how you're going to determine if your bookkeeper's doing a good job. I want these 3 or 4 questions. I want you to ask yourselves these. And if you can answer them confidently, then your bookkeeping's probably in great shape, which is obviously a big deal. Okay. First, when did you last see a reconciled bank statement? Second is, can I tell from my P&L where my money actually went? Third is, did I get my reports on time? This is a big one for me. On time is like no later than the 10th day following the month that you're reporting on. Ideally sooner, but sometimes information bottleneck happens. But did you get your reports on time? And does my bookkeeper ever reach out proactively? I'm going to add, is my balance sheet reconciled? And if you are like, how am I supposed to know if my balance sheet's reconciled? Ask your bookkeeper, and if they can't answer, then there's your red flag. That's all you need to know. And if they say, well, I reconcile the bank accounts, doesn't count. I need more than that. My child is hiding. She just crawled across the floor. Okay. Cheap bookkeeping is not saving you any money. Okay. If you hear nothing else today, hear that. It is a deferred expense that is also compounding interest on top of it. Get good bookkeeping and pay for good bookkeeping, and screw those reels that say that your bookkeeping payment is equivalent to a rent, because anybody that's paying $500 in rent, like, where are you living? In the dumpster? And yeah, that's what good bookkeeping costs. Sorry. And if you pay $100 a month, you will pay $10,000 for a cleanup and a shiz ton of money in taxes at the end of the year. And I'm so sorry to let you know that, but it is true. That's it. That's what I've got for you guys today. Thanks so much for joining. Thank you, Davey, for participating. We love having you here. Thanks, Althea, for your input, and peace out, Kenzie, who is already at preschool pickup. And if this resonated with any listeners today, or you are like, I really want to find out if I have good bookkeeping, but I just don't know where to start, please reach out. We are more than happy to help and point you in the right direction. We do discovery calls for free. We can definitely give you some good advice, or even take a look into your books and determine if your bookkeeping is where it should be. Okay? All right. Until next time, thanks again.